Good afternoon, everybody. Good morning or evening, depending on where you are in the world. Giving a quick update to Bitcoin, just some thoughts. Normally I'm always just unnecessarily bullish when I always want to call bottoms. Like, thought this was the bottom, and I don't know if I got sucked into that one. I can't quite remember. But this one is different, and here's why. For one, that huge wick is a demand spike. That came because essentially supply was zonked. That's right, zonked. That is what led to a shoot up like that. And the fact now that price has come in and has filled in and is filling in this area that was defined by that wick, good sign. That is a good sign. And also, too, what's down here? So, in case I've never mentioned it, the blue, oh my gosh, the orange area beneath all of this is average volume. So, mostly, I don't necessarily consider that data unless it is over average because average is good. It shows us that that is where the majority is kind of leading. So, as I look at here, this volume decreasing. So it's pretty negative in general whenever you see volume decreasing. So if it's decreasing into a move, if you see price going up and the volume is decreasing, putting in smaller bars, hashtag art, hashtag NFT, then that's negative. And it goes the same way with bearishness. So the fact that essentially where this volume has dropped off. I see it down there below. There's above average volume here, which is just number of transactions over that given period of time. And where did that happen? Kind of being modest. So that first green candle was kind of higher than where we are now. Just by, I'm sorry, we are higher than it, which is a good sign. Let me zoom in here. So 30-minute candles. And it's not so much picking a bottom, but once things start to become bullish looking and they start to confirm, so that's just a triangle pattern there, consolidation. And if this breaks up, that would very well be a bull flag. And again, this information by itself is meaningless because let's say this is our, oh, we draw a bull flag here and we expect it to go up, and then it breaks down and we're wrecked, right? So at any point we can kind of find the patterns that we want to see, but there's added information here because it's not just, oh, price is increasing, but we have this huge wick here that's defined an area. This is defined an area where there was increase of demand, a lack of supply. That is literally why price increases. And the fact that it moved really, so right across here is a previous area that this was a descending triangle that broke down. So what this support, that support broke, which now means that this level is resistance. And essentially, there's not really a bullish case until price can start to push through resistance. So this area, as earlier the past few hours, this area was support for a little bit there. It could have been a bottom, but no, this broke down. And it's interesting to me because this broke down and really quite immediately we got that shoot up in price that caused that wick. And at this point, I'm inclined to believe that this is it. As in this, what I just circled, that was a final blowout. I mean, there are people who are looking at these charts, they're trying to play the downside. They make money when price falls. So they continue to play the downside. And it seems as though that for now, sentiment has shifted slightly. And it becomes a question of how will price move? What is the story price will tell us? And again, the fact that this area of support broke What does this area now signify? This whole area should have represented resistance, price indecision, swapping of buyers and sellers, but very quickly it snapped up, which shows a thin order book. And that is either a thin order book or a heavy order load. Regardless, it was able to move upwards in a positive bullish direction, and now we see price is starting to proceed onwards. So we're gonna watch this now, because now the way I see this is that this upper wick here, really, I mean, this whole, as I was saying, this wick defined an area of demand, and now price is pushing back up through it. So somebody said on Twitter that normally whenever you see a wick like this, it'll come down and it'll retest. But I believe that, if we zoom in here, clearly this wick already went through a retest. So if we go into like the 5 minute time frame, I mean, gosh, maybe even the 1 minute, it was just a big order. But I mean, consider this, that yes, we could go down and continue to test this lower support line that I just drew, as was communicated with me. But see, I don't know, that to me that huge wick that went up there, the retest of that movement was here. This that's that's really where this became important to solidify its direction, because it it, it let us know where the order book was thin. And to me, again, this was the retest. That is the retest, and now we've come up through it. So bump up those candles a little bit. So yeah, as my drawings now kind of communicate there, as we saw zoomed in, I think that this demand push was already retested, and I think that it is now indicating to us where the demand is present. Um, this barely even retested down there. Again, not to say that it will not and it cannot. Obviously, I've been wrong many times before. What's that saying I always give out? Oh yeah, I don't have a crystal freaking ball. Alrighty, so back to what's important, which is that wick. It was the first touch of this level of what is now resistance. Remember, broke down, support is now resistance on the way back up. So that was the first touch of resistance there. And now if price, does begin to fill in this last portion and starts to, eat away at this area, which again, moving over here, this whole area should, in theory, represent resistance, because price broke down. This was clearly not an area that of previously established support. Therefore, it was resistance. On the way back up, it should push through, unless it'll just get bounced down. But again, the significance is that wick, because it shows a thin order book demand to the upside. And that's what I'm inclined to believe, especially with just how it's coming off of this bottom. It seems bullish. Yes, this is early, but I think that it's significant that these candles tested this area, that zooming out to where we are. Again, don't lose the forest from the trees. No reason to be zooming in on little tiny portions whenever there's still um, bigger context to consider. But yeah, so I mean, just like look at that. Like that is a clear area of indecision. Anytime you have a candle with its candle body representing a relatively thin portion, like just imagine candles that represent, and then these are the wicks, the upper and lower wicks. So candle body, I couldn't quite draw square. But what this is just indecision. These candles would represent indecision, because the area traded was, it could not establish an area that was big and wide like it sometimes is. That's a very wide area of price being traded. Whereas whenever you get these thin areas with large upper wicks, as we do see here on the 12-hour, or sorry, this is daily. So that's just going to indicate that there's clear price indecision. It doesn't take going into the smaller scales to know that. But especially it's a great site whenever you're trying to find bottoms. In hindsight, this big lower wick here was clearly a washout of sentiment. This just represented icky money in the market. Really, this whole downward trend. This is why I like bear markets, is because all of this is it's just getting rid of, most importantly, the people who are just kind of using the market for their own gain. And then it messes with people because down in here we get people who are really struggling to buy dips and putting their money where, I mean, it's just in risk, and it's a tough thing to do, is buy these trends lower and lower and lower. All of these red, like, I mean, depending on how bullish and excited you get, how tossed about you are in emotion, each of these times that it started to pump, started to show little promise, especially up here when it was pushing all-time highs, hashtag 69K. It's just like so easy to get washed up and enticed by price as it pokes upwards. And even before the most recent dump, we got a little bit of a reversal there before it just dumped even harder. And here's the deal: is this is all just momentum, and it's with price in terms of supply and demand, it kind of is a zero sum game. And that's why I do read a lot of these charts from a context of zero sum. And in context, what that means is that there can only be so many sellers. There is supply and there's demand. And if according to Bitcoin's tokenomics, there can only be so many in circulating supply, and the data is clear how much Bitcoin is in hardware wallets is just simply off exchanges, not being traded, and that number continues to go up. Yet somehow there are sellers. So at this point, for all we know or care, I mean, the only people participating in this market are sellers. And I don't mean that because obviously there's going to be buying along the way, but it gets to a point where at the lowest of lows, really anybody who is selling is really just trading back and forth, taking advantage of the negative sentiment in the air. And they're making money when the market goes down, so they're playing with each other too. So sellers selling to each other can play the market and continue to rip it down farther. But they can only do that for so long before literally all of these suppliers, all of the sellers are out of supply. They literally have nothing else to sell. Just like how if you've been buying this dip, you may be a little concerned that you don't have any more money to put into the market. And it's same for the people who are selling Bitcoin or other assets. They literally, like, they are out of Bitcoin, or if you're into Elrond, they are out of Elrond, and they simply cannot supply it. So really, I don't really understand truly why markets kind of go through these phases, simply because it's valuable to hold them. And I was going to say something else, not just something short-sighted like that. Like, it's valuable to hold them. All right. Well, anyway, so price is at a point where this whole area was highly battled over. All of these wicks that came down below, and then notice how there is a lack of wick here. So, really just essentially at this level, the sellers just ran out. Like, literally, supply onto into the market literally just ran out. And man, that was a gradual move from dumping hard to establishing some areas to dumping harder. I mean, that took some time. And really, I think that this whole area was so bullish. I just don't think that people were ready for the market to move so positively. That really, I mean, this whole dump, I don't like to use that word because it just sounds really negative, but this decrease in price, I mean, everybody who kind of had an established position, we were kind of okay with this washout here, because it was really just like, oh damn, like, all right, we're going down, like, here we go. Like, it was, I guess, in this time, it's almost like we were kind of ready for the bearish sentiment to return, because that was the bearish it had really gotten so far. I mean, price pumped out into all-time highs from 20K up to 40K, which is 100% gain, which relatively speaking is very good. and it pumped even farther up to 65K that first time. So this was really just one big leg up from a 3-year bear market that quickly moved from 20K to 40K to 65K. And that was the impulse move that I see. Specifically, Elliott Waves talks about three impulses, and on the way down, there's actually two. So I mean, I'll just say it really quickly because I learned a lot about human sentiment from Elliott Waves. I think it's rather interesting. So this is an impulse wave, and really, there's psychology behind it. But all that really matters is that when things are moving up, that's kind of called bullish, and there are three separate areas of that growth. And on the way down, so on the opposite side of that, we have kind of just washout sentiment where it goes down in price and it's really just churning, just like butter. And it's not fun on the way down, but it really, people say two steps forward, one step back, but it really is three steps upward and then two steps down. But golly, like the two steps down are so much harder to go through. And these areas of bullish impulsive moving to the upside is so fast and unexpected. It always catches you off guard. And oh shoot, can I actually? Yes, I can bring it back. So actually, um, because the bullish impulse happens so quickly, and each time it moves up, I mean, if you were there at the beginning, so forget whatever came before this drawing, but if you're experiencing a bullish move like this, and as I'm explaining with this drawing up here, like this first move, you're like, wow, nice gains, like wasn't expecting that, like maybe this is a recovery, and then it corrects down, and then you don't even care because you're still in a bear market at that point. And it goes for this too, because you move up again, and what does that do whenever you get that second impulse move is, okay, like this was questionable. I thought that we were going to continue farther down here, but but no, nonetheless, I was happy with the gains, but just wasn't really expecting. I'm like, wow, like maybe there's a recovery. So that's actually the first impulse move, is kind of that feeling. The second impulse move is only but a confirmation of the first. It is a confirmation of support, and it is a confirmation of demand. The second time that happens, it's still questionable because you're still in this experience. You're still experiencing a bit of excitement. I guess I'll just leave it to the word excitement for now, because you're coming from a bearish time. If you are experiencing this, you are coming from a bearish time. When it happens, it happens fast, and you're not ready for it. But the thing about this is, allow me to interrupt myself, is this is fractal theory. So what fractal theory is that what happens on a macro or large scale will represent itself in very small scales, minuscule scales as well. So check it out. Check out Elliott Waves, and check out blah 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 blah, blah fractal theory, because it is a technical analysis strategy that a lot of people use, and they rely on it, and they use Fibonacci ratios, and they play it, and they try to do that. And I know the data behind it, but I rely on the fact that because these charts are representing human sentiment, I don't care what your theory is, like nobody has a crystal ball, and I don't care what your Fibonacci ratio says. Like, it's Fibonacci ratios are still a matter. It provides a broad range of probability, and if you look into Elliott waves, you will learn all about how. So I mean, over here, some of these tools. What do we got? What do we got? Fibonacci. Blah, 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 blah. There are so many tools. That is what's crazy. So this is a Fibonacci calculator, I suppose, on TradingView. But these are all your ratios here, and these are all Fibonacci ratios. So it just it's always so wacky for me whenever I see people on Twitter talking about different Fibonacci ratios because they're so loose, meaning that they are only they only work when they work. Like they're no true indication of reliance. Like you can't rely on them. Why? Because humans are unpredictable. We are all reacting in our own lives in our real world where we're dealing with real people, real current events, and our real bank accounts. I'll leave it at that because that's why I don't rely on nor do I share information about, oh, look at this, and it retraced down to the second range of whatever. The point is that if I was to draw where you normally draw these, is this is the base, the start of the impulse move up to on the top. So each of these levels, 23, or I'll speak in percentages, but at the top is 23.6%, 38.2%, 50%, 61.8%, and 78.6%. So this is really just a range. And you'll see people refer to each of these numbers and they'll always talk about them as if price came down and it, touched 61.8%. And, that means that it's going to go up from now. I mean, I'm just bullshitting because the point is that it's just impossible to rely on those, but it does teach you a lot about sentiment. And that is what I want to emphasize. Back to the real world where I'm talking about real things. Look up those things because they're interesting. But we'll get back to this discussion because Bitcoin really looks to be strong here. It's testing an area where it was at before, and an area where those of us who were accumulating throughout the first bear move and then second bear move that ended in COVID, we experienced for the first time a move up and beyond 20K. And I think it just happened too quickly. So I was personally okay with the retracement down to 30K when it happened. I did not really expect price to go up and make new all-time highs, and I was very happy to see that. And considering too the launch of my exchange, I mean the value of my assets grew to all-time highs for sure, in that area, though of course, that involved some locked assets, like the MEX token can be a locked token called LockMex. If you're unaware of that, check it out. Elrond, you got Maya Exchange, you got MEX, you got LockMex, you got all the good stuff. So not the point of this conversation. So at this point, I mean, you can really see these three waves. I mean, look it up, like literally, like look it up and view Elliott waves and fractal theory from a very broad perspective. Not and think of it not to teach you about trading, but allow what you learn about Elliott waves and fractal theory and sentiment. Simply, this is not looking at charts. You are better understanding how humans think and how they act and how humans react, because that is all of what this theory is trying to explain. It is all just trying to explain humans and how they act, and it gives good ideas of how they do, and that's represented in the theory itself. But there's something to pull away from and view from a high perspective and value. So check it out. But back to really where I see that we're at. Like literally, look up LA waves, look up fractal theory, because I'm inclined to believe that this is what we're in the bottom of. We are in the bottom of this reactionary move of sentiment where price is washing down, up, gives us a surprise, tricks a lot of people who got in too late to get back in the market, because as it did, it made an all-time high. So I think that was another overextension, because Elliott Waves does talk about how the top of this first wave down, which is A, this is B, and then down here is C, whereas we got one, two, oops, one, two, three, four, and then the top is five. Such art, so NFT. I love that. Anyway, whoopsies. Here we are. Oops, just making sure. So anyway, back to the story. Sorry about that. So one, two, three, four, five. Those are impulsive, and then A, B, C. I mean, I think this is pretty clearly your A, pretty clearly your B, and wherever this bottom is a C, and it's much slower, and it's. I mean, this area up here really chugs on, like it is brutal because the B move, which took us to all-time highs, the B move which got us to 69K, was this little elbow there that fakes you out and you think it's going to go higher and you might freaking over leverage. And that's why it really wrecks everybody. And that's, it's so annoying because frick markets, because they're so freaking, they're all in hindsight because to predict is to guess, and to draw on these in any sort of way is just presenting a hypothesis. But when you look backwards, you read the data, you interpret the data, and it's just, I mean, I was so sucked into to the price moving up to 69 and making a new all-time high. So, I mean, I didn't get over leveraged. I don't use leverage, but it just made me feel like we are literally just gonna wee, we're gone. This is crazy because I still view and feel the power of decentralization, and I know that it's inevitable. And ever since I've discovered Bitcoin, I have just been waiting for the kind of that magic moment, if you know the song. But no, like literally, Bitcoin decentralization is going to be a problem. I don't know what the hell the path is going to look like. It's just so silly to just draw, upward lines because, to the moon. But to me, it's all inevitable. The bottom, every time it comes into question, is inevitable. A new top, it's inevitable. It's just going to continue to chug because it is a simple zero sum game. And supply and demand, zero sum game. Supply and demand are mother freaking at play here. And as soon as the supply is empty, sorry, I shouldn't have written there. As soon as supply is empty, depending on the true sentiment of that move in that time, once supply is empty, what's it going to do? It can only fill up because that's all that will do to really unlock more supply. There is order book to the upside that gives us supply, and that is why price rises once more. It's relatively simple to understand. But here's the deal is, as I said, this is the bottom of A. This is the top of B, which was 69K. And then again, this is sentiment. Like, don't think of this at a higher level, like than what it is. Just think about, you know, think about where you got in and what sort of sentiment the market was in according to this. Look it up. Fractal theory, Elliott waves specifically. What area of the market did you get in? And that's what I mean whenever I ask, what area of the market did you get in? Is not so much the price level, but like what was the sentiment? Like where were we? Because the way I see it now, especially in hindsight, this whole area was just a washout, a challenging of position of everybody who had gotten in the market more recently, which I've already talked about how I think that the whole move from kind of 30 to 65K was really just exceptionally bullish because at a point where, and I'll zoom in now with a little bit more context, um, I think that this move to 40K, bringing it into context of impulsive moves and bringing it into context of sentiment and washing about. I mean, because I was at 20K here and then at 40K, I expected this, I expected that, which that would have been I'm sorry, that would have been A. This should have been B, and then I thought price was gonna go back down and retest 20K, whether it be 20K exactly or, 23K. This is an area of consolidation. I was just, wow, prices jumped to 40K after, a lot of waiting, but sweet, like the market is freaking moving. We are back in this thing. But I mean, I wanted the market to come down and give us a solid shaking about, just like it is now. I wanted that to happen back here because this is so much healthier. I mean, imagine if this whole area developed. Imagine if this whole area just continued to chug on and not that many people got interested. I mean, this is just so much more time for those people who believed in the market, who accumulated over the past 4 or 3 years. Like this would have given, I mean, all of us, if you were in it, congrats. But this would have been an area of intense consolidation and opportunity for long term believers to buy a shit ton. But what happened, I'm not going to get into because, it just is what it is. But boom, that right there was that the buy from Tesla, and that I believe really messed up what I believe was going to be a healthy correction in this market. But mother freaking a, like literally right here, maybe it touched all time highs. But at the top of this area, where really, I mean, and maybe I was just an ignorant trader who got washed up in, the reality of trading, and it was never going to retest. But fact is, Tesla came out and gave us a 20% day on the February 8th, 2021, almost a year ago, going on a year ago. And golly, that just blew off the top. Like literally, like again, think about it. At 20K, we were like, wow, we're actually back to all-time highs. Think about what was in the media at this time. What were the newspaper articles referring to Bitcoin? Maybe Bitcoin was still silent, and maybe everybody who got into Bitcoin last time it was at 20K didn't give a care because they see Bitcoin at 20K again. Oh, whoopee, it's finally back there. Too bad it's all just internet scam money. But what happened? It moved to 40K. And again, think about the sentiment. Think about people seeing this in the news. Think about people getting excited whenever prices start to increase in dramatic ways. So this whole area was really just a push. Back here, pure skepticism of any new money. Coming up here, doubling, like that was pretty sweet. And that really ignited a lot of conversations for me, that was like, yo, like, consider Bitcoin, because I guess this might happen quickly. But imagine how much more attention it kind of caught in this area between $30,000 and $40,000. Again, this would have just been a super healthy time for price to accumulate new money. But what happened? Like it just exploded because Tesla came out as, owning some and accepting it at their store. All in all, like it just became a positive indicator of sentiment, and it led to price to blow off to 65K. In past videos, I've already gotten into how I feel about that blow off top to 65K. It is not and was not the same as what happened here, specifically, what happened there. Like that was purely fueled by what, skepticism, I don't know, excited money, gamblers, just this, I can't think of the top of the exact phrase, but last time whenever Bitcoin went to $20,000 on the way up, it was just pure euphoria, whatever you want to call it. And that is not what happened with the first pump from 40 to 65K. Like that was literally a speculative Tesla pump. And that is just why I feel, I mean, it really matured the market because again, that news like that has to come out at points, especially if the conversation is adoption and what it'll look like. News like that must come out. So I'm happy for it, but it has made this whole area so challenging because it's no longer, oh, just a little bit of a trickle of new money, trading around here. And this also gives time for projects like Elrond to develop. and grow naturally, rather than having all this new money come in and question at all-time freaking highs, why don't we have this, why don't we have that, how come my coin isn't performing as good as it should be, how come the blah 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 win this. Shut the hell up. Like, yo, this is a brand new industry, and stop getting excited just because the gosh dang price goes out the roof. Like, think about it in very like orderly movements of up and down, and just giving the market time to just grow and develop. Like, goodness sake, the saying as it is, Rome was not built in a gosh darn day. So for heaven's sake, that's my tone. I love you all. If you're listening, I love you. And I love anybody who, talks mad shite. But, I'm just frustrated because it's like, get it through your skull. This is how shit goes. And I'm not this way, I'm not that way. I'm just trying to spur on the conversation. So now that I've successfully scribbled everywhere, you now understand everything you need to know about trading, and we're all going to go to the moon. So thanks for watching this episode of, I don't even know if I'll post this on podcast Elrond, or maybe I'll leak the biatch on my personal channel, just for those true diehards out there that are just thirsty for the content. But I can't bring you all the way here just to not talk about the boy Elrond, because odds are that's all we really care about. I'm going to post this on Twitter for sure. Which, speaking of, I just want to say, I mean, again, if you're listening, I kind of feel like you're a bit of a diehard. But seriously, like, y'all are awesome. I say y'all because it's gender neutral, and I know and I hope that there are both men and women and those who I don't identify their identity. Anyway, I'm sure this is all inclusive, and that's why I say y'all. I don't have the freaking. I mean, I still own the NFT, but I'm on to Drifters. I really felt this Dare to Be Different. I mean, I felt Drifters. I felt the Dare to Be Different, which I just made up, and I'm kind of owning it because it feels good. Like, it feels great, and I feel like it's on brand for decentralized. It's on brand for uniting, and it talks about like uniting and empowering. And I've called, yeah, I won't get into it, but yeah, so I love the Drifters project. I love what they're doing and what they're about, and I just think it was fun to be a part of the mint, and a part of the hype that drew a lot of attention to it, because I understand the project means a lot more than what meets the eye, and that's why I think it's really great. Also, thank you for sharing this on Twitter. This was an incredibly long thread that really I tried to type up, that went over the past video that I did, but it was a bit of a mess. Nonetheless, really great information here. I think that I kind of represented it better in the video, which was this deep dives video here. Mad love, mad support on this. 280 views, less than 2.5 weeks or so. But I'm just really stoked about it because it means people are watching, and they're joining the conversation, which the conversation is me externally processing and trying to work through these things and understand them. So seriously, like, if you're listening to this, you do get an insight to just the nonsense. But yeah, so Alec and I are on episode 5. We put out five episodes. Going to hope to get podcast around episode 6 shot in person. It seems to be those conversations do better, and also the views tend to do better, which leads me to believe that it's just more engaging. But yeah, so seriously, thank you for the love on these videos. I'm trying to better articulate and understand what is valuable in these videos. And if y'all enjoy the podcast, that's great. But if there's also some other need for getting into my brain, and hoping to learn something from the way I think, then that's kind of what the combination is between the deep dives and solo sessions. So again, Alec, if you're listening, write in the comments. I like to eat salad with my pants down, so that I know that you got to this part, where I say that I really want you to do some solo sessions, because I mean, I think that people would be interested to hear what the heck is going on in your mind. What's going on in there, huh? What's going on? Seriously, I'm having fun. I hope that everybody is too, despite the market going down. But I mean, here's where it gets fun is that, if you're just a freaking diehard, like it literally just becomes a game of when is the bottom and when are we going to go back up? Is it here? Is it there? Is it down there? Who freaking knows? But like, unless something crazy happens, like, like the bottom will come in eventually. And I don't believe that we're going back to 20K, though we could. And the reason I say that is because when Bitcoin went to 40K, I expected it to crash, retest 40. It did not. I'm sorry, crash, retest 20. But again, that was after this huge retail market action got back in on it. And so, really, all of this is just retesting. So, just getting us back into the analysis there. I'll go into Elrond versus US dollar because I know all you people love the US dollar and looking at that chart, even though all it represents is just the Bitcoin pairing. So it's like US dollars underlying. So it's even more unpredictable because this data is literally representative of the US dollar paired with Bitcoin. And it's not so much Elrond and Bitcoin as much as it is like Elrond Bitcoin USD. Like I feel like that would be a better representation of it. Um, so I'll just point out that where we're at on the Bitcoin valuation is testing an area that it was at in October of 2021. Wow, that truly was not very long ago. But I mean, golly, like we had such a nice run up, and I mean, so I'll just draw a line there because that was essentially that signifies for me, that signifies an area where if you bought here, your post Myar Dex launch, whereas just including a smaller time frame. I mean, if you bought in this area before here, anyway that way, like you were just purely accumulating Elrond, and you were staking Elrond, and I mean at that point there was not really any discussion of NFTs. I don't even know if that was a thing yet. Like, I mean, I was just focused on just accumulating, and I was just taking anything that came. That is what she said, but at the same point, I'm not sure that's what she did say, if you follow. Um, so we're at an area where we have obviously support. The only reason that I feel less secure about analyzing Elrond versus Bitcoin right now is because I don't know, I'm just interested to see where exactly the supply of Elrond is. I'll go over to the growth page in a moment, but whenever Mex and Ride launched on the decentralized exchange, I mean, those two tokens brought a massive opportunity for supply to come into the market. So at this point, I mean, so let's go over here just to see it. This is growth.elron.com. We're sitting at 2.6 billion market valuation. At the top, I do believe that we passed the 10 billion mark, which is great, but that was just the first taste of growth. And everything that's happened since is just, the market churning. So user adoption continues to increase. Here we've got 1.2, I'm sorry, 1.2 million, and increasing regularly every day. Really exciting to see that. Other metrics there, daily transactions, total transactions. But this is really what we care about here. For one, the exchange flow is a really cool metric because you can see, I'll pause here for a moment. I mean, on this random day, it just so happens that data shows that 0 Elrond entered any exchange, whereas 39,000 Elrond left exchanges. So this pink line represents outflow of Elrond to just wallets or wherever else. It's just not on any exchange. Whereas the blue line indicates how many Elrond are being sent from wallets to exchanges. So in general, it's positive to see, a healthy balance of outflow and inflow. But I mean, this is an extremely interesting metric to look at, because look at this. I mean, like, there are some days like that zero Elrond are coming into supply on exchanges, which leads me to, so check this out, because this is, I mean, calculate what these inflows and outflows are. 70 on the 22nd of January, 73,000 Elrond. 73 times 130. So a couple days ago, $9.4 million worth of Elrond was removed from exchanges in just one day. 90, I'm sorry, 9.4 million in one day. That's just crazy. Seriously, like, do the math on these. That was a big number, but look at this. That day was 70. Did I put yeah, 73,000. 73,000 Elrond removed, whereas 3,000, sorry, I'll round up, 4,000 came onto exchanges. So, I mean, all in all, we'll just go ahead and make this a clean 69,000 Elrond on the 22nd of January. We had a clean $8.9 million worth of Elrond moved off of exchanges into wallets. I'm like, you got to be kidding me. Like, this money is going somewhere. Like, that is important. This money is going somewhere. Whereas, whenever it's an inflow, it's really just probably going to be traded. So what is this? On the 22nd, I'll start to move backwards here. On the 22nd, we had 73K outflow, 29,000, 47,000, 49,000 again, 44,000, 14,000, 10,000. I mean, this is a month time frame, and literally not once was there more Elrond that was moved onto exchange than was moved off of, and not by slim margins. I mean, look at the data yourself. 46,000 Elrond moved off, 371 moved on. You've got to be kidding me. Like, if this isn't the most bullish indicator you've seen, forget the price. Forget the price. This is insane. And then, okay, with that excitement out of the way, current supply. Look at this. Again, I wish they would expand this, because I want more than a month, because this is a downward freaking trend. What, can they please supply us with this data? Make it easy on us. But look at this. If you glide over here, you can see up top, you have all of the different exchanges which you can toggle. There's Binance, Binance US, Bitfinex, Crypto.com. For a while back here, Crypto.com had zero Elrond. And it's really strange, because I know for a fact that at some point in the midst of this data, looking back in hindsight, like, like, people were having some issues removing Elrond from Crypto.com. And I don't know, like, this data shows that they had zero Elrond. Like, I don't know what happened. I think that they kind of messed up. And I really think that, I mean, so each time you get these huge pumps like that, a lot of the time what that means is a um, exchange will be moving some of their assets, in this case Elrond, from cold wallets to hot wallets. So I guess that means that these exchanges, have their own, personal wallets, that this isn't tracked, because, apparently, crypto.com went from 0 to 275,000 Elrond in a day. So I don't know the logistics of that. Did they buy from somewhere? Like, did those assets come in for, I don't know. So if you know, let me know in the comments. Let us know. Start a conversation. But the point is, so that total amount is the total number of Elrond held on exchanges. So we went from 1.2 million. Crypto bumped up the price, or bumped up their supply to 1.48 million. We'll just call it. But check it out. Like, you can see these lines, going down. This is supply moving off of exchanges. All, like, literally, holy cow! Like, it's, and this is not. This is, I don't believe that, I'm not sure if this is how many Elrond the exchange owns, or how many how many of the coins are being held on wallets hosted on these websites. So yeah, that's another question. If you know, but I do believe this has to do with how many Elrond are being held by these individuals. So, um, anyway, let me know if you know the answer to that in the comments. That'd be great. But yeah, so we have breached officially. According to this data, we'll see if we get another pump like that of Elrond moving from hot to cold wallets. But we are under 1 million Elrond on in supply. I mean, we don't know what's being held, and obviously, those can be moved at any point. But this is just extremely compelling data that people are interacting with Elrond. I mean, I wish that this would really just give me more options to show this data, because I'd love to check it out and analyze it. But I mean, for the time being, just the fact of these outflows versus inflows is just absurd. I would love to follow the trail of breadcrumbs, which I'm sure that I could, given that this is all transparent. Um, Nonetheless, I'm going to move on here because lastly, it shows, this is important too. This is dev activity. This is really important to see because it's going to show you how many things are being done by the developers on a daily basis. So potentially these are days off, but again, I wish there was more data to see here, but this is all transparent information you can go look up on their GitHub personally, or not personally, but individually. And then other information too here, which I don't really care too much about. But it is interesting to see, how the impressions on Google are with Elrond, and also Twitter awareness, which it says Twitter mentions, and over here these are impressions and clicks. So I'm not sure what this data is. If Elrond does have an ad campaign, I believe this is just raw data from Twitter, referring to how many times Elrond network has been mentioned. So don't forget that those metrics are important. So tag Elrond and whatnot whenever you're talking about it to get people to see the name. But in general, it's cool to see. But again, would appreciate more data on a larger time frame. So I think that this is just, kind of a bare bones. If you don't want to get into the technicals of looking into the white paper and learning the architecture of each of these, parts, whether it be Elrond, whether it be MEX and the Meyer exchange and the lock MEX, all that, info can be learned out there. There's reading material. But if you're more interested in just observing the data from a higher level according to these supply and demand metrics, how many Elrond are on exchanges, how many Elrond are leaving exchanges to wallets, what's the daily transaction, really great info there, which I know that there are other websites too that show information like that, which I think it's just the Explorer. So explorer.elrond.com will also kind of give you some cool information. I mean, infinite information, really, because you can start to click into all of these different things and learn about, who's building on Elrond. Like, if you want to know who's building on Elrond, like, that's what all of these coins are. And there's 28 pages of them. I mean, obviously, some of them are just junk. Nonetheless, I mean, all of these coins represent something. I know that. I don't know how to pronounce that, but I've seen that on Twitter. I mean, it's just pretty interesting. I don't know what Planta is. I've seen that, but look, I mean, like, if you want an insight to see what's going on, like, it really seems that this is kind of a cheat code here. So check it out. You can see. I wish you could sort this by transactions, because it'd be really great to see, who's got the most transactions running. Wrapped Eagle is getting there, but again, these are I think these are just ESDT tokens. Oh, that's right, because NFTs didn't have anything. Um, excuse me, but yeah, I mean, this is just super cool to see this. You can see all of this information, how many nodes each of these people are running. Binance is staking 30 nodes. So if you've never done this math, I'll just, sorry, that was literally just random there. So clear that out. So, it's cool that Binance is staking it all, but in case you didn't know this, in order to be a validator, you have to run at least one node, and Binance has 30 nodes. So, really, what will happen over time is, so I interrupted myself. Let me get down to the important part, which is Binance staking has 30 nodes. Each node equals 3,200 Elrond. 3,200 Elrond is what it takes to run a node. Perhaps 3,200 Elrond is what it costs to run a node. Whereas, I mean, it's not a cost like Bitcoin is, because the cost of running a mining setup is physically demanding. This is just the cost. I mean, obviously, you have to run all of those nodes. So, yes, you do need hardware to run each of those validators. Nonetheless, 3,200 is really, the cost of Elrond to run and to be a validator. And given the price right now, which is, very low, accordingly, rather relatively $130. So each node costs $416,000. So, how many does Binance own? 30. So, again, this is in US dollar now. Binance has a $12.5 million stake in Elrond. That is what that means. So Binance staking 30 nodes, 30 times 3,200 times the present value of Elrond, $130, equals $12,480,000. And that isn't even the largest validator. I mean, again, this was just explore.elrond.com/validators. You can see everybody who's validating here. And I mean, if you're wondering, if you don't know, well, how many nodes are there? So 3,200. 3,200 nodes is, and it looks like one has left. So there is a queue of 65. So literally, like, there is a line of 65 times 3,200. There are 208,000 Elrond sitting in this queue, waiting to hopefully become validators one day. So as soon as it looks like an active validator left, and so a lucky whoever's next in the queue, you're going to come over here and complete all 3,200 active validators for the blockchain. So that's really great. And that, if you were to do the math, 3,200 um, validators times. Did I say it's 200? It's 2,500. I hope I didn't mess that up. Back. Oh shit. Hopefully I didn't mess that up. There's no history. Oh, frick. I can't remember if I did 30, because I think it's 2,000. Frick. How many is it? All right, you're gonna go on an adventure with me. My brain is getting stuck here. Um, I am forgetting how many Elrond it takes to run a node. I think it's 2,000, right? Freaking A. And again, the way I'm freaking recording this, I can't go back in time and edit it out. So, um, if you're here, yippee, you get to see some of this. 2,500. There it is. Okay. Like I said, I really don't know if I messed that up. So I do apologize if I did mess that up. So 2,500. Let's just see if all this checks out again. So clear that out. So Binance, back to where we're going with this. We'll go back to Binance just to give you an idea. No, we won't go to Binance. We'll go to active validators. Elrond has 3,200 active validators, 65 in the queue. Rather, 3,199 plus 65. So let's just start there. 3,199 plus, and I'm only saying that just because it's, never mind. I'll just do it. So Elrond will have 3,200, and the queue will be 64. Yeah, one of those days, eh? I mean, another one of those videos that I didn't plan to be as long as they are, and it's just a lot of talking. So here we are. So you need 2,500 Elrond to be a validator, and there are at this point Like I said, 3,200 active validators and some in the queue. So 3,264 participants, validator nodes waiting to become validators if you're in the queue, times 2,500 is 8,160,000. Elrond times its price. So that's just gives you an idea of where prices come from. And what the fuck's going on? Yes, oh my god, I'm just looking at too many numbers. Excuse me for my language. So $1 billion of Elrond's market cap um, is represented by just those who own nodes. So again, 1 billion, 60 million, 800,000. Big numbers, big numbers. And this is US dollar. Again, I'm sorry, I'll have to watch back the recording to see if I did mess it up. But back to really just some high level thinking of supply and demand, who's running the system, the stake that these people have in the system, what they're doing for it. So it's cool to see this information. I got way off base. Because I at least wanted to talk about Elrond and give some point some fingers to some of these websites that are helpful. But yeah, so I mean, this is again just a big story of the market churning, of people learning about Elrond and pushing to all time highs, and so here, so there, and again, this is on a 3-day scale. So again, if this big candle to the upside turned around and started to fill in here, that just would have been simply put a sign of demand to the upside. But that was the mainnet launch. That was definitely a bit of a fake out. Obviously went lower. But yeah, so I mean, where are we at in the market? This was a really solid time of accumulation for those that bought this decrease in price, experience this run up here, and then from this point forward, this is it's been fun as prices gone up to make new highs here. Guys and girls, sorry, I just really think that will that play out? I think that that's unfair to draw that just because it just represents just like excitement, like, and it will go up now. But like, what are we talking about here? Like, is this going to take some time to accumulate? I don't know. And obviously no crystal ball talk, but again, the point is that it's all a matter of the market churning and attracting different investors, and then enticing new players to come into the game, and then money leaves the market, sentiment changes, and it comes back to an area of uncertainty, and nobody likes to lose money. But yeah, for the time being, how I read this is, this all time high. And when was this? This was about a year ago. So the same point that Bitcoin essentially hit its all time high, as did Elrond. Literally, I've knocked it on the same day that I spoke about before, the 8th of February, 2021. It's nearly been a year, which is normally a pretty decent time frame for a cycle. And in this cycle, I believe that this is bullish continuation. I do not believe that we are going forward for another. I don't believe that from here we're going to downtrend for another year and a half to 2 years. If this was a true bear market, like we got last time when Bitcoin went to 20K in 2017, all just churning, all just churning. And then all the while, remember that, during this kind of sideways motion here, or hear it from me, that Bitcoin was also churning sideways. So this is still defined a lot by the market movements of Bitcoin. Nonetheless, we still had a fake out here where, both of these times I thought that the market was going to move. And then, you kind of get wrecked enough times once the market starts making these big lower wicks like that. Like, I mean, that's just clearly showing that there's excess supply to the downside. And I don't like to play them because, like, I didn't come this long to sell. So when I see those, I'm always going to be bullish because it's just like, whatever, like, let them sell. Like, whatever. So downward wicks on daily time frames, not positive to see, especially whenever they're moving down with such confirmation momentum, whatever you want to call it. So, I mean, there's sometimes that wicks are positive, sometimes, they are kind of negative because as you see here, I'm going to erase that other circle because I don't want to confuse or misguide. Like, that circle there was literally just like a final washout of sentiment of anybody who was waiting to sell, who just was going to sell. That just literally was sellers. So that was, really great to see that wash out, those two lower wicks retesting this breakout area. And that's really what solidified that, as exactly as I said, that was a breakout of bullish sentiment. It tested this previous area, this accumulation. This confirmed really that this whole area was accumulation. Whenever price starts to break out, big old retracements, and then whoo, there we are. So again, that was great to see. But as much as I thought probably that each one of these times was going to take off, and sure, in fact, I'm almost positive that on this way down before I had so many followers on Twitter, I was still calling out for the bullish resumption. But it just it just takes some time. Takes time for market to backfill. It was very clean there. So really, actually, I talk about this in a much earlier, not a video, but just post on Twitter that I made, where I talk about a wick that occurred really before price, has really taken off, and that was kind of here it was. So that wick, this applies in the same way that the recent wick that we got on the hourly time frame as Bitcoin. So I mean, this one was for Elrond. For Elrond, this was a big one. Let's see in Bitcoin how much it was. Oh wow, that was a 30% wick. So that was a clear sign of a thin order book to the top. And as we saw, and this is my case for Bitcoin right now, that we never really retested this bottom. That as soon as this wick really started to fill in, really started to move up, there was little to no retesting of that wick. This became a pure indication of demand that was filled. And, it moved up a little bit farther, a little bit more demand kind of represented in that area before we did finally kind of get a larger washout and then sideways movement. And I'll move out so you can see where we are in the context of things. So what I'm saying is, this breakout here that we got, this made an all-time high. It took some time chugging, ripping and dipping over and over again, thinking that it's going to reverse. And then it just continues to go down until literally like you just really stop caring. Like you literally just, stop caring whether the market continues to go down, and you really become in a bit of disbelief anytime the market starts to move. So, and, once the market did start to move, establishing these areas of demand getting filled, finding bottoms that push to higher highs, pushing into this area of resistance. I mean, it just continued to push sideways consolidation, dump. You love to see a dump. You don't want to see a dump, but you love to see it. Because what is it doing? It's testing. In that case, it tested this area of consolidation that broke out into a higher area there that retested. It's testing, pushing, bouncing along. Look at that. I mean, it's literally just pushing along, testing supply and demand. And really, like, I mean, here we are. This is essentially the launch. That was like the first bump of Meyer exchange. And then it came down and corrected, which literally, even at that moment, even after this push here just after the launch, and then this correction here, like I was like, oh shoot, like now is the time that we're gonna get a correction here. But hey, it is what it is. This is as they say, sell the news. And that probably would have been a not a good time to buy unless you were going to sell short, not short sell, but sell in a short period of time, shortly thereafter. I mean, a lot of people did, but a lot of people also bought. Now here, what are we talking? This is post Meyer decentralized exchange launch, and what are we getting here? Just extreme freaking volatility. and people are like, oh dear, Elrond is the most volatile in all the land. And it's like, yo, like, there's no surprise. Do you understand how small the market cap is? And do you understand also too how skeptical people are, and just like the skepticism surrounding this ecosystem? I mean, the successful launch of the decks was a risky endeavor. And as many of us know, there were times that the market, the Maillard decks shut down, and it was for positive things. But really, I mean, we just got caught up in a larger market cycle having to do with Bitcoin and the larger industry that, just didn't situate well for Elrond. Things could have happened a little bit better, but at this point, we really, I hate to say it, but at this point, we are probably getting some capitulation from people who now bought before the decks. And I mean, yes, I expressed a little bit of concern over the MEX token and Ride token launching and how much capital that unlocked for the market, both literally in terms of the locked MEX that longer token holders had. That could have been added to the supply, but also just the rewards. The farming rewards have been absurd, both for Ride, for MEX, and they really, in my opinion, continue to be just ridiculously incentivizing. Like, gee whiz, like, come on, people. Are you really complaining about these APRs? Like, it just goes to show that people have lost all basis of expectation in cryptocurrency. I don't know if it was flipping NFTs that they buy for $100 or something into $6,000 or something. I mean, who knows how many X's were attached onto some of those NFT sales. But I don't know if it's that expectation. I don't know if it's just the pure increase in price that Elrond had up to $550. I mean, it's just everybody just cool it. Like, everybody just come back down to earth. Like, we don't always need, we should not expect huge gains, because it's really just insane, these APRs that we're getting, and people are finding trouble with it, saying that it's not enough. I'm so tired, and my voice is, I mean, I'm not tired, but my voice is tired. um but yeah, so like, check out what's going on with price action. We're retesting areas of prior sentiment. Everybody that bought up in these areas. I mean, look how volatile this is. I mean, like, yes, Elrond is highly volatile, but that's why I like it. I mean, I like it because it shows promise from a fundamental standpoint, and the fact that it's volatile just goes to show how, whenever something is volatile, I mean, think about it from a perspective of, it's what do you call it whenever somebody is kind of like offensive, and sometimes they just bring about conversations that aren't necessarily controversial. There we are. I'm glad I was able to get there. So yeah, like, Elrond is freaking controversial. Um, and it's just one of those things that what you want to see is, as clear signs of sentiment, is think like over here in this range, look at all those sideways movements where channels were able to develop, whereas here, I mean, we have channels, but they're clearly down. So that's not really what you want to see. So um, it's clear whenever you see points and clear indications of levels. Like, I mean, it's just objective at that point, like, that we're in volatility. And at that point, it becomes volatile, unexpected, high risk to engage with the market when it is volatile. And that's really, this after this broke out all-time high, breakout to the upside, like, essentially, like, this whole area is volatility. This whole area is people taking profits, and this whole area, because again, accumulation, this was, it flips from profit taking to accumulation to price discovery. So here we are again. That really, this was definitely a stage of profit taking. Just reading the chart, I mean, as was this. I mean, profit taking if you're a seller, and if you were, perhaps accumulating here just for the fun of it, just to sell. I mean, accumulating and selling, but it's positive because also too volatile markets are attractive for short sellers, both short sellers, people selling short, but also people making shorter time frame trades. Because if a asset is volatile, or on the other hand, if an asset is not volatile at all, like there's nothing to risk on it. Like there's nothing to gamble on it. It's highly probable that it's going to move within a range, and therefore, why would people have much expectation for it to, act in a way that people didn't expect? So that's how people kind of play whenever they're using leverage and they're short selling, is they're just really trying to play the unexpected volatility. Obviously, hopefully it lands in their favor, but that's a positive thing despite what it may feel. I think that it's kind of a positive thing for an asset to be volatile. Is it positive for an asset to lose value and go to zero? Like obviously not, but clearly that's not what's going on here with Elrond. Clearly there is demand, as I've shown with the metrics regarding the supply, not supply and demand. I'll just zoom in since it's right here again. Exchange flow. So it's just evident to me there's demand. I mean, just look at the NFT market that is blossoming. Like, it's truly blossoming and attracting so much attention and positivity and community and value. Elrond Ducks is one of the, I think, the only NFTs that I own, though I know that many do provide passive income for owning the NFT. But y'all, like, I really believe that just this is a big old downturn, and I'm gonna zoom out on, like, a 3-day time frame. I'm gonna delete everything because, for goodness sake, like, don't lose the forest from the trees. Like, look at this is 2 weeks. These candles are 2 weeks, and look at these upward candles. Like, we know that those are to indicate demand. We know it, and as upward wicks are to indicate demand, lower wicks are to indicate supply. And do you see many of them? Like honestly, like once we start to get up to these higher levels, like yes, we start to see some wicks that are just really excess supply. But I mean, it's just evident to me, and I'm biased, but it's evident to me that, things are going to likely get a little bit more volatile as they really start to increase. But in general, moving out from a large time frame, now we're looking at monthly. These wicks to the upside are indicating demand, and it would be insignificant, if there was just upper wick that traded sideways, upper wick traded sideways, and the whole chart was sideways. But the fact that, as we know, price has been increasing each one of these times, with this chart, so price is increasing to fill in demand, as I was talking about earlier. Again, each of these candles are a month long, and even the indicators that I like using, the MACD, moving average, convergence, divergence. We don't have data yet for the month, but for the 2 week, I mean, even that, I mean, we can literally see this channel, and regardless of these, crosses, and regardless of these baby little bearish areas here, like, because I like the MACD. I'll probably talk about it later in a future video. But y'all, like, Elrond is really defining a movement here, and to see this on a 2 week time frame, I mean, like, it's just one of these is a average that is a little bit, it's a leading average, so it takes some time for the different averages to kind of catch up to one another. So the more volatile it is, really, the less defined the values are going to be. But it's, to me, it's really encouraging, as weird as it sounds, that each of these times, like, we're getting a harder push down viewing this from a horizontal perspective. That each time we get a bearish move, even at worst, like it's the worst we're getting is getting more intense. So these areas of bearishness. This is the first one. This red one here was really this kind of area there. But golly, look how sharp and look how intense that has been. That bearish move there, and that's what we're in the midst of. So it's really easy to feel that when price is so low. But like read this as a simple indicator of, at the peaks of these at the peaks of these, what do you call a trough? Yeah, at the peaks of these troughs, at the apex of the trough, I don't know. Like that's, looking at a weekly time frame, like if you can average out your buys over these, 2 to 3 to 4 to 5 week periods where the market is, as worse as it has been, like those are literally the most profitable moments. So if you get something really sharp, that's likely going to, or no, sorry, if you get something where we get a bunch of red candles progressing forward like this, but all of a sudden, like I mean, if this was to click around and start putting green bars without having this gradual decrease, what that is I read the MACD to mean that the dark red is definitely bearish, but really like once it turns to that lighter red, um, that I won't get into it, although I kind of already am. But that just means that the sentiment is shifting. So will we get a broad area where the sentiment will slowly shift back, to a bullish direction, which will kind of look very gradual like that, or will this MACD be a little bit less curved and a little bit more sharp? You see how those shapes, I mean, that represents data, that represents human sentiment. So I think I think that we're in for something sharp. If it happens now or later, I mean, just according to precedent, like any time price has made that new low there of sentiment, it has not really breached it much. But you can see here that that red candle is pushing quite heavily into just bearishness, bearish momentum at a level of strength that hasn't this asset, this organism has not seen before. So I mean, this is like a rubber band. That's how I've heard it described, and I appreciate that because the harder this pushes down, I mean, not to use terminology like slingshot or launch, but really the harder this pushes down, the harder the relief will be on the upside. Because I mean, think of it just solely as pressure. Sellers getting rid of it, whereas all these buyers, buyers, right, are accumulating, and eventually, this if the supply is really falling, then at that point, to what degree will be defined by how this MACD moves. If it's a very sharp reduction, if these bars start coming and producing that lighter shade there, that's going to indicate a quick reverse in sentiment, which it could be sentiment, but it also at that point just points to supply and demand. So lots to consider here, but I expect, as I think I've talked about on that big post that I did, that's pinned. So referring to this tweet from December 20th, whoopsies, this was a pretty big tweet that I made that really just tried to discuss, where price was going to go. And I think that I almost did. I hate to say it, but I probably did get this kind of close, because this was a head and shoulders that really did play out. People, didn't really expect it to happen. I didn't either. But I think I even talk about how it's hard to say how far it will go. But back on track, coming to a close. My voice is very tired now. Um, but oh yeah, it's pinned to the top of my profile. Oh yeah, it was the last video I talk about it. So what are we doing? What are we doing? Where are we at? Where are we at? I don't really know. Point is, I mean, this is just washout. As soon as Bitcoin starts to show strength, which let's now that I've been talking for an hour, let's see what progress we have. Boy, I mean, things are still looking promising. This could be inverse head and shoulders, which could retrace down to about there, but who's to say? I'm tired. Thanks for watching. I'll make a post. This is looking bullish though. I will say, Elrond is looking bullish. Coming to an end here. I just think that Bitcoin is in a final washout, as I already talked about. And I mean, look at this. Like, these are still some nicely formed channels here, but clearly we're just getting some intense washes out of people who are non-believers. GTFO, get rid of your eagle. We don't want you anyway. So if this wick gets retested, obviously that will get that could be a bearish indicator, but at this point things are looking solid. At this point, this is truly such a bloodbath that we've, for goodness sake, like, this has just got to be a relief rally incoming. And I really don't see why this relief rally couldn't or wouldn't take us back this area where we traded sideways for so long. I really think that was building up bullish momentum, but then Bitcoin took over and reminded us that there are sellers. So this was really just a washout, getting rid of everybody who was going to sell. As I said, just using the term broadly, sellers, profit takers, whatever. And I mean, it's just, look how the price has peeled. It's not so much just dumped, hasn't necessarily just out of nowhere capitulated, but it's just been a very gradual acceleration. But that's in the same way that, growth to the upside at that degree is unsustainable, as is decrease. This is the yin and the yang. And at this point, the farther this bends down, I mean, the harder, the faster it's going to snap, in my opinion. I mean, especially considering all those growth metrics that we got into. It just, to me, gosh, I did not expect for the market to bleed like this. Reminder to myself and to the listener that you never do. And in closing, like, market is looking good because it's going down. And I said it actually in a tweet earlier today. Maybe I'll find it really quickly just to read it. Um, um, So, at bare minimum, I'll just read it to you. At bare minimum, price dropping like this entices any investor to nibble or dip their toes in. Lower price makes entry less intimidating. Lower price makes entry more approachable. So the more times you go through bear markets, the more you begin to love them. And the reason for that is, as I say, bear markets are where the market is made. These are people, as the market goes down, these are people exiting. This is just signs of exiting. But if the people leaving don't really have that significant percentage of ownership of the asset according to the supply and demand, they can exit all they want. But the people who are to exit, how much did they have, and how many people are going to exit? So at the end of the day, when it comes to investing in valuable assets, which I hypothesize that Elrond is, it's all a matter of just how long the sellers will sell, how many of them will sell, and it's all a matter of people coming in and freaking buying at these low ass prices. Like, are you kidding me? $130? Like, if that if that doesn't feel cheap to you, whenever we were at like 200, 250, like, I still think that was a little bit too exciting. Especially after the Dex launch, like, we pumped to 350 after Ride, just before Ride launched. Like, I think that those were still high prices. Like, I've been in Elrond for a while now, and if price stayed at those levels, I would have been like, damn, like, all right, like, this, means business. So if price stayed there, like, that would have been fine for me, who owns a good amount of the asset. For me, relatively speaking. But for those of you who are trying to accumulate, like, literally, like, hopefully you didn't do anything crazy as the market was falling for the first time. Hopefully you did calculate your buys, and you were thoughtful with preserving your cash in the event of continued downtrend. Which, I mean, even when we were back in here, the trend is your friend. The trend was clearly down, and even though it did poke up and tease us there, you know, let me just share it with you now. A reminder for everybody that yes, sure, this could be a a bull flag, but at this point, it's anybody's guess, how long it will take for this bear. Damn it, I said it again. It's anybody's guess how long it will take for this bull flag to develop. Bull flags do not become invalidated if they go lower than the previous levels. Really, all that is just backfill and buyers purchasing supply, excess supply from those who are selling it. Sellers are sellers no matter if they're profit takers or just people getting scared and selling. Sellers are sellers, vomit is vomit, and we just gotta to wade in the vomit a little bit and trust that literally our ability to hold an asset, to accumulate it, to continue to support the price, the value of the asset, it will become evident. I fully believe that everybody will shit their pants as soon as Elrond starts to move, and I don't know. We'll see if the movement hits all of the other coins, um, or if, and when I say that, I mean all of the other cryptocurrencies in this market. Um, but I mean, I think that we're looking at, yeah, I mean, until April, I would expect a modest. I think that would really indicate kind of a much slower chug on that MACD. Where, I mean, looking at this on a 3-day time frame, look at this back here. I mean, these red bumps came about a few times. So that really, this bearish sentiment really was tested for the investors 3 times back then. So obviously, this red could end quickly, and we could get a quick, resumption back up. But I think that just in general, I like to see longer periods of accumulation and washing out, so that again, so that the support, the capital that is creating the foundation, is solidified, and so that we don't have to go down as hard as a collective whole the next time Elrond goes up to make higher highs. So I think this is the absolute worst of the worst. Like, obviously, like, this has been bad, but I really do think that things are looking positive here moving forward. I would like to see, I don't really care if it's a gradual decline in that red area, which this area just represents the amount of space between these two averages, just a different way to look at it. But I think that we could see something. Gosh, I mean, even there, I don't like to draw some of those projections because sometimes they are really, um, you know, they take some time. So really, we're looking to rebuild all through the month of February. If something like this does play out, I definitely think that we're looking to rebuild back into these previous levels that we were diving through after Myer Exchange launched. I think that we are. I think that February will be an explosive month, but it will be a highly volatile month. So we'll see what plays out. Um, oops, whatever. So that's what I'm anticipating for the month of February. And I think that's a great place to end. We'll see if I put out some videos, because I mean, I'd like to talk about Mex and Ride, which, I mean, I guess at this point it's another one of those things that if you're still listening, then you get the bonus content. Um, So let's just head over to, I'll continue to use R to run. Let's look at Mex and Eagled, which last I looked might be making a bottom, like for real, for real. And when I say for real, I mean that, it kind of looked like it was going to make a bottom several times, but at this point, zooming quite in, um, you know, we see what could have been a bottom the other day. Not a sizable move here. Nonetheless, it's touching here again. So now that we zoom out, we can see that, and the blood on the street is heavy for Mex. The impermanent loss has been real if you did make a bet on Mex. So I don't know, no crystal ball, but it's no crystal ball, and I'm biased. Um, because I own this asset. I mean, it's been chugging sideways for, really kind of like the longest amount of time in its history. I think that's fair to say. I mean, maybe not because we had this area, but, considering the hindsight data, that was definitely just a short term rally that was rejected and went farther down. I've talked about how this could be a result of some third party websites coming about that allow you to exchange your lock mex for mex. But all in all, I just think that we've been in a bear market. Bitcoin, Elrond will naturally trigger to or fall to mex as well, but it did bring up some questions as to the utility that MEX provides, which at this point MEX is a governance token, which little to no governance. I don't even know why I say little to no, because there's no governance. I mean, not true, because by owning it you do govern, the price that you kind of set for it. Whenever you own an asset, you're a price maker. You make the price rather than a price taker. You take the price, but you only take the price of the person setting the price if you decide to transact. So you're a price maker if you don't sell, but if you do sell, you're a price taker, and you're taking a price that is being offered by somebody who likely wants to buy low and potentially sell high. But we don't think about those things because too high level for however many minutes deep into this recording we are. Hopefully it is recording, because this would be so much wasted breath. So I'm biased. People are talking about how Elrond is going back. I'm sorry. People are talking about how Mex is going back to the price that it started at. But I mean, that's clearly not true whenever you consider that against Elrond. But Mex versus Eagled, I do believe it's getting deep, very deep. It's getting deep. So we don't like to see that as investors, but this is why I find importance in the Elrond pairing, because I won't get into it. Talk, talk, talk. Cheap, cheap, cheap. Ride. Let's talk about Ride. Looking positive. Looking positive. I mean, but everything is fucking looking positive. Why? Because we have just been in the freaking trenches. Like, things are looking positive because we've been in the trenches, and things have been hard and difficult. And golly, like I said, I didn't expect for price to go down like this. But I really enjoy how Maya Exchange has given us opportunity to farm, because something that I've enjoyed doing is clicking on your account. I'm not logged in, but by taking either your liquid assets, or your your liquid non-liquid assets too, and dividing by those by the price of Elrond, because that will essentially give you the value of Elrond that you're holding. And that has been something useful for me to do, because I've seen that I've been making lots of Elrond, despite the market being down. And it's definitely the silver lining. So Myar exchange um, account details, I think it is. And what is it? It's like, just take the your portfolio value, and I'm actually gonna, nah, portfolio value divided by Really? That's 8? It's not even 8. It's a small 8. Um, yeah, divide your portfolio value by the price of Elrond, and that will give you equals number of Elrond. It's not that you own. Um, yeah, your portfolio is worth. That has been extremely valuable for me because I also my portfolio value. Um, what I actually do is I don't take the portfolio value. I take portfolio. I'm just making sure I spelled that right. I actually take my liquid assets. So I won't type it out because I'll just say it. That I take my liquid portfolio value because that will give me the true. Maybe I will do liquid. So I'll just for now I'll put liquid up there, and then liquid over there too. I can delete it later. But I can talk about it now. So yeah, if you divide your liquid portfolio value, not including liquid equals not including, and I don't like the asterisks. I like bold and I like underlined. Alrighty. So I value the liquid value because that's real money, whereas we don't know where the price of MEX will be in a few years, and I guess just 1 year, because it's a locked asset. We don't know what the heck the market's going to do. So I guess I'll just leave that little asterisk there, and I'll just put another asterisk. So isn't that great? We have a open and closed parentheses, and well, that's pretty poor. Hopefully, I'll redo that. But you get the point. This has been really helpful for me because MEX and or the Meyer exchange has provided a lot of value. Right now you can take all of your Elrond, you can sell half of them for Ride, become a liquidity provider. So there are some implications, but 43% APR in liquidity, plus 0.25% of every trade, according to the percentage of your ownership of the farm. So that's implied with these liquidity pools, LP farms. But up here, this is just staking MEX. So right now, MEX is giving you 12% APR just for staking MEX, which is now dipped below ownership for Elrond. So likely that will continue for that pool because there's much more risk to reward in these double asset farms. So this is the way that I have been able to stay excited and stay motivated through the price decline is literally what you're seeing here on Meyer Exchange. I mean, if you're unaware of it, but yeah, so pretty cool what they've done here with opportunity to earn passive income yield off of these farms and staking pools. So really great to see that. And aside from that, there was some lockmex that was gifted to me that helped me to accumulate more Elrond. But yeah, so price has been going down, but somehow the as I wrote over here, the number of Elrond my portfolio is worth has somehow increased by anywhere from 15 to 25%. and I've been buying NFTs. I've been diversifying my portfolio to different assets. Like, quite honestly blows my mind how um, Elrond and the Meyer exchange truly has allowed me to earn so much yield during this market downturn. Like, it's not been fun. My portfolio value has definitely been tested, or rather, my portfolio value is being tested. It's in an area it has not been for months. Just according to price. Um, and it's no fun. We all always want to see the market continue, but today we didn't get that, or this month we didn't quite get that. But we've attracted a lot of attention. We've been building, we've been growing, we've been talking new users, new developers, new partners. So many reasons to be bullish on the ecosystem. And I'll really just leave it at that. I guess I will just touch on ride two, because yes, this candle represents big time manipulation, but it still implies demand. So, who knows where that is, since this whole shoot up in price happened within 15 to 30 minutes of launch. It's hard to say where exactly the price is being demanded. But earlier when I looked at this chart with you all, I had said that it looked great because, we've been going through shit. We've been going through price falling from $550 to 130. Like, it's been shitty. And whenever you're down, I mean, it's not like you just get hopium and just get obsessed with going back up. But at this point, I believe that the market has matured to a point where this could be the bottom. And this could be the bottom that really starts to accelerate some of these coins that have built upon the foundations of Bitcoin, both literally and figuratively, to grow and to define their worth and define their value in the realm of cryptocurrency on that coin market cap website. We got lots of players in the game, got lots of money in the top 10, but who deserves to be there? Who deserves to be there? And who's fighting? Everybody underneath the 10th spot? I mean, it's all a battle in a way, even though Benjamin Minku, talks about how it's not a battle. It is in a way still, even though it's going to onboard many users. Whenever you get into a point in the market cycle where there are a lot of market participants just competing against one another, and there is a lack of new money coming in, you're going to have a little bit of zero sum game going on, to where there's only so much money in the market, and it needs to flow to where value is being made. And Elrond is still at number 42. Somebody was talking crap, saying, oh, it deserves to be low. But the whole market, as a rising tide rises all boats, as does a falling tide lower all boats. So everything has fallen in market cap. Something that is always fun to look at is just the overall market cap, 1.6 trillion altogether. Bitcoin is probably below a trillion at this point. I actually missed it. What is Bitcoin at? Yeah, plenty below. So 684 billion, not quite to a trillion anymore, but the market cap still at 1.6 trillion. And we'll see. I mean, it looks like the sellers are ending. It looks like they're giving up. It's not so much they're giving up as much as they've lost their resources. Simply put, the sellers are losing their resources, and at this point, the only resource that matters is how much of these assets they owned or have owned, because again, they're adding to the market, and they can only add so much. So if you're in the market now, cheers to you. You've been a champ. You've really deserved the coming gains. I ain't no damn genie, don't got a crystal ball. I don't know where the market's leading, but I believe in the value of cryptocurrency, decentralization, Bitcoin, as that has led me to Elrond and the Maya exchange. There is just crazy value that is here. I am fully convinced, and I've seen it in my own portfolio size. And I say size versus value because the size of my portfolio, kind of tied specifically to Elrond, has continued to grow. And I'm making passive income by being a liquidity provider. I mean, it's just, there is value, and it hasn't even begun. We have Ride. Holoride is the only token on here aside from MEX. This will grow. Over here in analytics, we have top tokens, which, this is technically wrapped e-gold, but only 4 tokens. I mean, they have page 1 of 1 here. It's going to take a while to fill this up. But, we saw in this validator area over here, tokens, was it? Yeah, these are people building on Elrond, and will some of these tokens make it to the MyR exchange? Who's to say? I don't know. I mean, what else will come? I don't know. But this is just positive information, positive data, positive market movements specifically, and especially referring to just the growth metrics of where the Elrond is, where it's going, into exchanges, out of exchanges. We're in the trenches. We're in the trenches quite literally, and the trenches tend to be deep. So put on your battle hats, eat that ramen, eat those saltines, limit your spending. I don't actually want you to be eating ramen and saltines, but just, yeah, like, set yourself up for success. It comes from the front side before a move, as well as the backside. Not saying take profits, not saying be a seller, but just protect yourself so that if or when the market moves down, it's disappointing. I speak for myself. It's disappointing when price goes down, but it feels right at least. So you want to get to that point where when the market goes down, at least you can acknowledge that, okay, it was appropriate. It was, price just jumped. I acknowledge that price should go down from here to correct. So that's the first step of bear market mentality, is acknowledging that for every up is a down. And, you know, we always forget, I always forget, the sideways quote unquote support building action seems to be convincing, especially with these upper wicks of demand, but it just continues to test you and push you. And so there's this second kind of area of bear markets where, in this area, you're at least acknowledging that, okay, we just moved greatly, awesome appreciation there, but it's time for a healthy, downturn in price. And then the second part we're in is pure kind of just capitulation mentality, where you, strong, wise investor, are not capitulating, but you are adding a little bit more to your position on the way down. And you don't need to be. Sometimes, it comes a time that you've run out of cash, and at that point it just comes to holding and having faith in your investment, which, again, hopefully you're not questioning the value of your investment based on the market price. Rather, you have done your research and you understand the value of the asset that you hold for foundational reasons, whether that be the white paper or just the tangible value you understand this, ecosystem to represent. So lots of keys being touched on there. But I mean, especially as we're testing values, that, this was a breakout, and this was retested once. This is a retest of sentiment that occurred back in September. And it's appropriate. It makes logical sense. If this was 3 or 4 years ago, I mean, man, that'd be a different story. But this move to all-time high, correction, move to all-time high. Like, come on, acknowledge the correction. Acknowledge that we are washing about in money that came into the market through the summer, through into the fall months, and of course into the winter months here. But just appreciate time, that it moves slowly, that markets sometimes move slowly, sometimes they're volatile, sometimes you get a little excited, and just address and confront the excitement both for yourself and for others. Consider other market participants and how excited or overexcited they might be getting as well. So I'll leave it at that. I think I may have at least said that at least once, but I'll leave you guys here. Price is $130 and we're looking good, considering how low we are. And we have a nice path forward. Lots of areas to move up through. February is the month of rebuilding, and I think February will be the month of Elrond talking about and revealing some of the insane partnerships and groundwork that they're doing with Utrust, TwistPay, and so many others. So today is the 24th of January. I'm not sure when I'll see you again. These deep dives are very spontaneous, but I look forward to the next one. Go ahead and give a follow if you want. I'll probably post this information out there, advertise it there before anybody sees it here. So hashtag exclusive content. Dare to be different. All you crazy degens out there. The Economistic out. Peace.